Accounting is a great career choice. There are many jobs available for accountants. Here are a few. Bookkeepers work in a company's back office. They record everything the organization earns or spends. Tax accountants help their clients fill out tax returns. Internal auditors check their employers' records for accuracy. Budget analysts manage a company's financial plans. Management accountants are business supervisors. They study business operations and help maximize profits. Financial advisors help people make smart investments. The highest paying positions require a CPA license, but jobs are also available for students. Many firms hire them as trainees or file clerks.
How do they say it? Symbol equals. Interpretation is equals. Example: 1/2 equals 0.5. Symbol plus. Interpretation and plus add. Example: A plus B equals C. Symbol minus. Interpretation minus less subtract. Example: A less B equals C. Symbol times. Interpretation times multiplied by. Example: A times B equals C. Symbol divided by or over. Interpretation over divided by. Example: A divided by B equals C. Or A over B equals C. Symbol 1300. Interpretation 1300 or 1300. Example: The company has $1,300 in the bank.
Mega Office Supply. Invoice number 626-521-732-4. Bill 2. Equity Accountants, 4545 Oak Street, Kensington, Pennsylvania, 990765. Invoice number 626. Invoice date 2010-11-25. Customer ID EA1. Date 2010-10-30. Your order number 626. Our order number 100967.626. Sales rep DF. Ship via Ultimate Transit. Terms 2/10 of 30. Tax ID 229887466. Quantity 500. Description: paper clips. Unit price 0.02 cents. Total $10. Quantity 20. Description: stapler. Unit price $15. Total $300. Quantity 30. Description: desk lamp. Unit price $25. Total $750. Quantity 4. Description: bulletin board. Unit price $10. Total $40. Quantity 10. Description: file cabinet. Unit price $99. Total $990. Quantity 5. Description: whiteboard. Unit price $12. Total $60. Quantity 10. Description: dry eraser. Unit price $3. Total $30. Quantity 250. Description: binder. Unit price, $1. Total, $250. Quantity, 50. Description, notepad. Unit price, $2. Total, $100. Quantity, 10. Description, cubicle divider. Unit price, $120. Total, $1,200. Subtotal, $3,730. Tax, 10%. $373. Shipping, $150. Balance due, $4,253. Mega Office Supply provides superior products and customer service. Please let us know immediately if you are not completely satisfied with your order.
Mr. Wenton, we reviewed your business plan. Your ideas are very realistic. We are happy to help you start your company. Here is a list of electronic devices that you need. Laptop computer. Desktop computer with floppy drive and CD-ROM drive. Flash drives. Printer. Copier. Fax machine. Calculator. Landline telephone. Mobile telephone. Desk lamps. Mega Office Supply sells these items. They offer free delivery in town. With your permission, we can place the order. Delivery takes 1 week on most items. The computers, printer, and copier may take longer. Cordially, Timothy Johnson and Rebecca Myers, Johnson Myers Consulting, LLC.
Getting back to basics. Let's review the basic bookkeeping cycle. No matter what type of organization you work in, there are 6 steps. 1. Gather source documents for all transactions. These include purchase invoices, payroll master files, time cards, credit card statements. 2. Analyze the financial effect of every transaction. Typical transactions include payroll, sales, purchases. 3. Record financial effects in a journal. Then post them in the accounting software. 4. Perform end-of-period procedures. Count inventory. Check for errors in classification. Adjust for errors. 5. Prepare an adjusted trial balance. 6. Close the books at the end of every fiscal year.
Businesses exchange information. Therefore, companies must have broad-scale uniformity in their records. Information must stay consistent. USA Generally Accepted Accounting Principles, GAAP. In the USA, the Financial Accounting Standards Board, FASB, has a system. It's called Generally Accepted Accounting Principles, GAAP. GAAP is a rules-based approach. It creates rules for disclosure. Europe International Accounting Standards Board, IASB. In Europe, there is another governing body. It's called the International Accounting Standards Board, IASB. It uses a principles-based approach. It describes general accounting principles. Accountants use these as a guide. It shows them how to record financial transactions and include proper disclosure in financial statements. Companies can decide which approach to use. Many choose both.
Getting to the bottom line. Most people know that the term bottom line means the most important thing. But it's also an accounting term. It refers to the bottom line of an income statement. An income statement is also called a P&L. That means profit and loss. A P&L statement shows a summary of a company's financial transactions over a period of time. It starts with sales revenue. This is the money a company gets from selling goods. The cost of those goods is deducted from the revenue. Next, the general and administrative expenses are deducted. Finally, taxes are subtracted. The number that remains on the bottom line is called net income. This amount is the company's bottom line. Income statement. Sales revenue. 2010, 700,000. 2011, 500,000. Less cost of goods sold. 2010, 500,000. 2011, 500,000. Gross margin. 2010, 200,000. 2011, 0. Less general and administrative expenses. 2010, 90,000. 2011, 90,000. Operating margin. 2010, 110,000. 2011, minus 90,000. Less taxes. 2010, 7,000. 2011, 5,000. Net income. 2010, 103,000. 2011, minus 95,000.
The people's accountant explains balance sheets. Income statements show financial information over a period of time. Balance sheets, on the other hand, show a company's financial status at a certain moment in time. Let me show you how to read them. Balance sheets follow this equation. Assets equals liabilities plus owner's equity. It's that simple. Assets are what a company owns. Liabilities are what a company owes. Equity is what a company is worth. Assets include cash, inventory, accounts receivable, and fixed assets, like land and property. Liabilities include accounts payable and debts. Owner's equity is the total value of the company. The sum of the assets should be equal to the sum of the liabilities plus the owner's equity. Balance sheet as of July 31st, 2011. Assets, cash, bank account, $10,000. Accounts receivable, $15,000. Inventory, $5,000. Fixed assets, $50,000. Total assets, $80,000. Liabilities, accounts payable, $11,000. Debts, $4,000. Total liabilities, $15,000. Owner's equity, total equity, $65,000. Total liabilities and equity, $80,000.
Where did all that cash go? R.H. Benton Enterprises Incorporated. Cash flow for year ending December 31st, 2011. Sometimes an income statement shows huge net income, but the cash flow statement shows negative cash flow. How can this be? Cash flow statements show the inflow and outflow of cash. This includes revenues and expenses, cash distributions to owners, dividends paid to stockholders, financing activities. When a sale is made, it often takes months for payment to arrive. A company may have generated $500,000 in sales, but only received $100,000 in payment. The income statement counts $500,000 in revenue, but the cash flow statement records only cumulative cash, the $100,000 in proceeds. Cash flow from operations. Cash generated from sales, 100,000. Payments to suppliers and employees, minus 70,000. Payments on debts, minus 15,000. Payments on taxes, minus 5,000. Net cash flow from operating activities, 10,000. Cash flow from investing. Payments for new investments, minus 9,000. Dividends received, 2,000. Net cash flow from investing, minus 7,000. Cash flow from financing. Debt increases, 4,000. Dividends paid to stockholders, minus 8,000. Net cash flow from financing activities, minus 4,000. Net cash flow, minus 1,000. Cash balance beginning of year, 4,000. Cash balance end of year, 3,000.
Grand Toy Company 2010 Annual Sales Report. Between January and March, revenue hovered around $35,000. In April, the cost of goods went up slightly. As a result, we increased prices. This had a negative effect on sales. In fact, revenue plummeted sharply to $20,000. From April to June, revenue stabilized and steadily increased. In July, sales dropped dramatically from $28,000 to just $19,000. This was the result of a new competitor opening up across town. We recovered quickly in September, just before the busy season. This was partly due to a sharp decline in cost of goods. It allowed us to lower our prices. From October through December, we experienced our usual seasonal increases.
From John Simmons, Senior Accountant. To Becky Johnson, Human Resources. Charles Stanley, Sales. Nicholas Long, Marketing. Good morning. Many employees complain about keeping records. We do keep lots of records, but there's a good reason. We need them to assess the health of the company. Here are some ways we interpret your records. Return on sales. Net income divided by revenue equals return on sales. Return on equity. Net income divided by equity equals return on equity. Year-over-year growth rate. Profit 2011 divided by profit 2010 equals year-over-year growth rate. These equations and others help us examine factors that eat away at our profits. Last year, we had thin profits. Because we had accurate records, we found out that it was due to uncollectible receivables.
First Venture Bank, 2437 Commerce Street, New York, New York, 10014. Thomas H. Johnson, Capital Incorporated, 10 West 39th Street, Chicago, Illinois, 60610. Dear Mr. Johnson, account number 58756. We regret to inform you that you have an overdraft of $200 on your account. On April 3, 2010, Total Value Office Supply cashed a check in the amount of $500. Your account balance on that date was $300. Your upcoming statement includes overdraft charges in the amount of $35. To avoid further charges, please do not make any additional withdrawals or transfers until compensating for this overdraft. If you have any questions or concerns, please contact us. For your convenience, customer service representatives are available 24 hours a day by phone.
Why are managers obsessed with cost? Setting sales price. Managers set sales price by using markups or the cost-plus method. How? It's simple. Start with the cost of producing something, then add a certain percentage. This percentage includes the desired profit and fixed expense recovery. But what if a company sells below cost? Lowest prices of the year. Dumping. Sometimes, businesses try to gain an advantage by selling below cost. This is called dumping. Many countries have passed laws against dumping. It is a predatory pricing practice because companies use it to drive competitors out of business. Businesses can only lower their prices down to their costs. Otherwise, someone can sue them.
We will get it done. We will get it right. We will help you get on with your life. That's the promise of Calvin Dean and Associates. We specialize in tax accounting. Our experienced accountants help you with all your tax accounting needs: corporate tax, sales tax, property tax, excise tax, inheritance tax, value-added tax. In addition to individual and corporate accounting, we also offer income tax preparation services. We assist you in filling out your tax forms. Then we will file them with the IRS at no additional charge. Call today to make an appointment.
Memorandum. From Bill Anderson to all staff. Good morning, team. I want to offer the best service to our clients. To do that, we need to review depreciation. There are 2 depreciation methods. We must consider each client's needs when deciding which to use. Straight-line depreciation evenly decreases the value of a depreciable asset through the entire recovery period. Accelerated depreciation accounts for more wear and tear during the first years of a tangible asset's use. Each depreciation schedule is useful. Both end with the same salvage value. Depreciate assets, like cars, that go through a lot of wear and tear with the accelerated method. Depreciate assets, like computers, that suffer obsolescence with the straight-line method.
AVN Pharma Education.